There are multiple exams like MCOM, BCom, CA, CS, CMA, wherein question regarding this particular topic is definitely asked. Okay, that is how do you differentiate between direct tax and indirect tax. Okay, so in this video, we learn about the differentiation, we'll understand that. Also, in this video, we'll be having a quick discussion of the tabular format of the differentiation between direct tax and indirect tax, which can be straightforward as it is used for answering any of your questions related to this particular topic. Okay, so watch this video till end in order to learn a scoring answer. Okay, so let's begin. Firstly, if we talk about direct tax is simply a taxation whose burden cannot be shifted. That means the person who is earning income, okay, that person himself, herself is obliged to pay the taxes. It cannot shift the burden of tax. For example, if Mr. A is earning income, okay, then Mr. A is liable to pay the taxes. He cannot shift the burden to anybody else. Okay, now, if we talk about indirect taxes are the taxes, okay, whose burden can be shifted. Why we are saying this? For example, this particular indirect tax, when we will learn about it ahead in the upcoming table format also, that it is the taxation that is applied on sales, okay, or you can say on supply. The supply can be of product or a service, okay. Now, on every point of sale, this particular tax is applied. It has to be paid by the seller. Generally, it has to be deposited by the seller. But the seller has a choice. It can, I would say, recover. It can collect from the customer. Therefore, it is said that the bearer of the tax can be different from the payer of the tax. Wherein, if we talk about direct tax, it is directly implied on the income of the person, and it cannot be segregated. The payer and the bearer of the tax cannot be segregated, cannot be separated. Okay. So, since under indirect tax the burden can be shifted, therefore we say it's an indirect tax, indirectly collected. Okay, the payer and the bearer are different. If you're clear with this, let's head towards the quick tabular format that will clarify the differences between direct and indirect. Okay, so firstly, difference between direct and indirect. Here, again, the same thing, that the payer of the tax and the sufferer of the tax are one and the same person, wherein here it is collected by the seller. For example, seller has a price, okay, price that he's charging, for example, is 100, okay, but he can collect, add taxes, okay, for example, GST at the rate 12%, okay. Now the seller can collect 112 rupees from the customer. It can be collected from customer. Okay, this means, this simply means that the seller who is collecting 112 will be keeping 100 in his own pocket, wherein 12 rupees, that is in the name of GST, okay, in the name of any indirect tax, will be collected from the customer but will be deposited to the government. So your depositor, the payer, is the salesperson, okay, is the seller, wherein the bearer of the tax is the final customer. Okay, so therefore it is said that payer of the tax is not the sufferer of the tax, is not generally the outflow from the seller's pocket. Okay, next, impact on one head and incidence on other head. Simple. Next, income based taxes. These taxes, if we talk about direct tax, income tax, it is applied on the taxable income, wherein this is applied on the supply. Here, to simplify, you can say that it is a sale, either of goods or services. Okay, it is applied on sale basis. Whenever a sale transaction takes place, this indirect tax is applied. Whereas whenever income is generated, income tax is applied. Okay, there are multiple conditions and I would say uh, bars given. Okay, till which it is exempted. Okay. Next, rate of taxes differ from person to person, wherein your rate of taxes does not differ from person. If we talk about direct taxes, depends from person to person. This means, for example, if we talk about company, if company is earning, they will be charged with a flat rate of 30%. For example, it's a foreign company, they will be charged with 40%. Whereas if we talk about individual, there are slab rates. Okay, there are multiple ranges of income which attract different levels of percentage of tax rates. Okay, so it says that it differs from person to person, whether it's an individual, whether it's a cooperative society, whether it's a company, whether it's a partnership. Okay, it depends from person to person. The rates differ. Okay, whereas if we talk about here, indirect taxes, they do not differ from person to person. Instead, it differs from goods and services. It differs from product and services. Okay. For example, a particular service attracts 18% of indirect tax. Okay. Now, whether it's a local small seller, okay, business who is selling that particular service, or whether it's a multinational or I would say national level, okay, a business who is selling that particular service, whether the turnover is of 50 lakhs or whether the turnover is of 50 crores. Okay, the indirect taxes does not differentiate on the percentage, on the I would say on the quantum. Instead, it depends upon, it applies upon, it differentiates upon the product and type of service. Okay, so we would say simple or very simple basic that direct taxes are based on, are differentiated from person to person. Okay, wherein indirect taxes are differentiated on based of products and services, or you can say supplies. Next, entire amount that is collected from the income earner is submitted to the central government. Very important, is submitted to the central government. Wherein if we talk about indirect taxes, it is bifurcated and distributed and I would say divided between central government and state government. Okay, next, here there is a concept of previous year and assessment year. Whereas if you talk about indirect taxes, there is no such concept of previous year and assessment year. Everything that is earned, okay, in the upcoming month, in the following month, a return is filed in which you provide your details of sales and purchases, and if there is any net amount payable, then you pay that amount of GST, you settle that off. Okay, you do not wait for any following year. Instead, within that year, it is being settled off. Okay, if we talk about indirect taxes, okay, previous year and assessment year, a very simple criteria is that, for example, if you take 1st April 2023 to 31st March 2024, okay, we have a financial year. In this financial year, you earn income. Anybody, it can be a business, it can be individual, it can be a partnership, cooperative society, multiple. Okay, any person can earn income. The year in which you are earning income is known as financial year. Whereas the following year to this financial year is known as assessment year, wherein there are multiple due dates available. Okay, the 31st July 2024, 30th September 2024. These are the due dates by which you have to do a particular ITF filing. Here, in the following year, the person who is earning taxable income is required to submit a form to government, okay, in an online portal, income tax portal. Now, it has to submit incomes, calculation, and it is required to submit tax calculation. Okay. Now this entire document is submitted to government. Is submitted to government and in an online format, online document. This document is known as ITR, or you can say income tax return. Okay, so for the assessment, there are multiple more months given, a period, stipulated period given in which the particular person who is earning any taxable income can calculate said income, can calculate the tax on such income, and then file a particular return, a particular document, submit it to the government, claiming and confirming its income and the taxation onto the same, and pay the taxes onto the same. Okay, so there is a bifurcation of the year in which you are earning and the year in which you are required to file your ITR. There is a differentiation between financial year, or it is also known as previous year, PY, previous year, and assessment year. Okay, so similarly here we say that under direct tax we have differentiation between previous year and assessment year concept, whereas here in this indirect taxes, within the same year it takes place, there is no bifurcation and concept of previous year and assessment year. Next, it is particularly submitted and governed by CBDT, Central Board of Direct Taxes. This is the board which regulates, okay, if there is any changes and all, that is, any amendments are brought in. This is all done as per CBDT. Whereas if we talk about here, it is CBIC, Central Board of Indirect Taxes and Custom. Okay, earlier it was known as CBEC. The earlier name was CBEC, the Central Board of Excise and Custom. Okay, now it is known as Central Board of Indirect Taxes and Custom. Okay, CBIC. Here it is progressive nature. Why progressive nature? In order to set up a fair tax system. Okay, that means there are different ranges of income which attract different rates of taxation. Okay, for example, a person who is earning 5 lakh will be charged with some separate rate of uh, taxation, whereas somebody who is earning 50 lakhs will be taxed with some different rate. Okay, so there are different ranges given, and each range attracts different rates of taxation. Okay, it is to make sure that it's a fair tax system. People who are earning more, who are capable of paying taxes at a higher rate, are charged with higher rates of taxes. People who are earning lesser cannot afford much tax payments, therefore they are applied, they are impacted with lesser tax obligations. Okay, here if we talk about regressive nature, it is a flat rate. It's a flat rate. Okay, that means irrespective of the seller, whether the seller's turnover is 1 lakh, 10 lakh, 1 crore, 10 crore, okay, million, it doesn't matter. It doesn't matter. If a particular rate is 5%, it will be charged 5%. If a particular rate is 20%, it will be charged 20%. Got it? So it's a flat rate given. Therefore, it's known as regressive nature. This is a very basic tabular format, okay, which is guiding you to answer the differentiation between direct tax and indirect tax. This particular table can be learned, can be understood, and can be used for answering any of the question that is demanded in your any particular exam. Okay, and I guarantee you, you will be scoring a good mark. For example, in BCom exam, there is a differentiation asked. Okay, so you can write these differentiation in tabular format, and then later it requires a little more explanatory answer. You can describe all of these pointers with examples. Okay, you can use this tabular format and then explain each of the pointer with examples. Definitely you will be earning 20 out of 20 because it's a 20-mark question. Okay, multiple more exams are there. I'm just taking an example of this BCom. Okay, I hope this information helps you. This has cleared much of your concepts and given you an insight that okay, how to cater to any answer, any question that requires this particular differentiation answer. Okay, see you in the next video. Till then, take care, be safe. Thank you.